So for BCom Honors, BCom General, CMA Inter, CA Inter students, join online class of Dr. Subrata Mukherjee. And today I am going to discuss the problem number 8 on the chapter Depreciation. Depreciation has been charged for the years 2015 to 2018 at 10% on reducing balance method on opening balance of each item of plant and machinery in use. The balance of plant and machinery account on 31st December 2018 was rupees 54,000. There were no sales during these years, but purchases were rupees 16,800 on 1st September 2015 and rupees 11,400 on 21st December 2017. The management decided that depreciation should be charged at 20% on the same method but calculated on the closing balance of each year with retrospective effect from 2015. You are required to pass journal entry for giving effect to the revised basis at the end of 2018 and prepare plant and machinery account and revised plant and machinery account for all the years. This problem relates to change of depreciation with retrospective effect. The balance of machinery as on 31st December 2018 is given. And what is the missing figure? The missing figure is the balance or the written down balance of the plant and machinery as on 1st January 2015. What is the method of charging depreciation? It is the written down value method or the diminishing balance method, and your accounting period is the calendar year that is from 1st January to 31st December. So let us find the missing value which is not given in the question. So let me first prepare the structure and then we will try to find out what is the balance of plant and machinery as on 1st January 2015. So this is the method of charging depreciation, the current method of charging depreciation. So current method of charging depreciation. And this is the proposed method of charging depreciation. So the balance of plant and machinery as on 1st January 2015. So this figure is not given. We will find it out. So and purchase on 1st September 2015. So this balance is given as 16,800. So there will be an outstanding figure and this is the balance, or rather I will say the balance. So balance before charging depreciation. So less depreciation as on 31st/12/2015. So what is the method of charging depreciation? It is 10% on the original balance or the balance as on 1st January 2015. So whatever be the balance on 1st January 2015 of the plant and machinery, we will charge depreciation at the rate of 10% on 31st December 2015. So we will get a balance on written down balance as on 1st January 2016. Then we will charge depreciation as on 31st December 2016 because there was no transaction during the year 2016. So this will be the written down value as on 1st January 2017. So this is also missing figure. Then There was addition of machinery. So at purchase on 21st December 2017, this balance is for 11,400. So balance before charging depreciation. We will find out this balance. Then we will charge depreciation as on 31st December 2017. So we will get the written down value as on 1st January 2018, and we will charge depreciation as on 31st December 2018, and the written down value as on 31st, or you can say as 1st January 2019. So this figure is given at rupees 54,000. So what was the depreciation, or what is the value or the written down value on 1st January 2018? If depreciation is charged at 10% on this balance, so if you say this is 60,000, then this will be 6,000, because this represents 90%. So this figure, you can easily get it, 54,000 divided by 90%. So this is 60,000. So balance on 1st January 2018, we have found out to be 16,000. Now, what was the amount of charging depreciation? So the balance on 1st January 2017, let it be X. So let me show you a small working. So the balance on 1st January 2017, I have taken as X. Then there was addition of 11,400 to the plant and machinery account. So there was addition of 11,400. Then we have charged depreciation at 10% on the opening balance, that is the balance as on 1st January 2017. So opening balance, that is balance as on 1st January 2017, and the purchase amount less depreciation is equal to 60,000. So this is the working. So X, or 90% of X, is equal to 48,400, or X is equal to 54,000. So the balance as on 1st January 2017 is 54,000. Then there was addition of 11,400. So balance before charging depreciation was 65,400. So 5,400 was the depreciation on 31st December 2017. Now we have found out the balance as on 1st January 2017. So what was the balance as on 1st January 2016? So this will be 54,000 divided by 90%. So this is 60,000. Again, 10% depreciation is charged on 31st December 2016, and the balance on 1st January 2017 is 54,000. Now we have to again take the balance as on 1st January 2015 as Y. Okay, so similarly, we will find out what was the balance as on 1st January 2015. So let it be Y. So Y, then there was an addition of 16,800 in 2015. Then you have to charge depreciation of 10% on the opening balance, because it is given in the question that 10% of depreciation will be charged on the opening balance. So this is equal to 60,000. So 90% of Y is equal to 43,200, or Y is equal to rupees 48,000. So 48,000 was the balance as on 1st January 2015. So there was an addition of 16,800. So this figure is 64,800 and 10% depreciation on the opening balance, that is 4,800. So if you charge 4,800, you will get the balance as on 1st January 2016. So let me show you in one page what is the entire calculation. We just give a look at it. So I have calculated the opening balance of plant and machinery as on 1st January 2015 through back calculation method. And I have shown you the entire working in one page here. Now the balance as on 1st January 2015. So what is the proposed method of charging depreciation? This is 20% on the closing balance, that is balance as on 31st December of each year. We are going to charge depreciation at the rate of 20%. So this is the amount as on of plant and machinery as on 1st January 2015. It is taken as 48,000. Then there was an addition of 16,800. So 64,800. So you need to charge depreciation at the rate of 20% on 64,800. It is 12,960. This is 20% on 64,800. It is given that the proposed depreciation will be 20% on the balance or the closing balance, that is the balance as on 31st December. So if there is any addition there, then we have to charge depreciation. But the current method of charging depreciation was the 10% depreciation on the opening balance. So this was the difference in the method of charging depreciation, and the effect has to be given with retrospective effect, that is the balance as on 1st January 2015. So what is the written down value as on 1st January 2016? This is 51,840. Then you have to charge depreciation at the rate of 10% or 20%, so 10,368. So this is 20% on 51,840. So the written down value as on 1st January 2017 is 41,472. Now there was an addition of 11,400 and the closing balance before charging depreciation is rupees 52,872. Now you are going to charge 20% depreciation on 52,872. This is 10,574. So this is basically 20% on rupees 52,872. This working is very important, and I have shown you in my earlier video that working is a part of your solution when you are doing a problem on depreciation. So the written down value on 1st January 2018 is 42,298. And then you have to charge depreciation at 20%, so 8,460. So this is 20% on 42,298. So this is 33,838. Now you just see the total calculation. I have shown you one page. I request all the students who are viewing this channel or viewing this particular video to compare the workings that you have done with the workings that I have shown here. You can see it clearly on your screen, the method of charging depreciation, the current method of charging depreciation, and the proposed method of charging depreciation. Now let me explain you that the opening balance of plant and machinery was not given in the question. So we have to find out what is the opening balance of plant and machinery as on 1st January 2015, and the closing balance was given as rupees 54,000. So this is the working. I request all the students to clarify your working in your notebook. Okay. Now, what is the written down value of plant and machinery as per the proposed method of charging depreciation? So we have calculated at 33,838, but as per the current method, it was 54,000. So how much depreciation you need to charge in the current year? So there was an excess depreciation. So you need to charge in the current year 2,000 2,460. That is the difference of 8,460 minus 6,000. So this is the amount of charging depreciation, excess depreciation for the current year, and for the prior period item, you need to calculate. So I will show you the journal. So you please write the journal entry. So profit and loss account debit. So this will be 2,460. Then prior period item account debit. So we will find out this balance to plant and machinery account. So what is the difference? So this is basically 20,162. How I arrived at this figure? So this is the difference of 54,000, that is the written down value as per the current method, minus 33,838, that is the written down value as per the proposed method. So 54,000 minus 33,838, you will get 20,162. So for the prior period item account debit, so this will be the difference of these two, that is 17,702. So you can also calculate. So if you find out the difference of charging depreciation for 2015, 16 and 17, you will arrive at 17,702. So this is the journal entry that you have to pass as on 31st December 2018. So being the excess amount of depreciation charged as on 31st December 2018. So prior period item, this figure will also be transferred to profit and loss account, but for this prior period item account will also be transferred to profit and loss account ultimately. But for the understanding or for the clarity of the problem, I have debited this amount to profit and loss account, that is the current year depreciation, the excess depreciation that has to be charged for the current year, and this is for the prior period item, that is the retrospective effect that has been given in this problem. The adjustment entry is 17,702. Now you have to prepare the plant and machinery account. So I will show it here, the plant and machinery account. So you can see the entire workings I have presented before you, and in the next page I will show you the plant and machinery account. So plant and machinery account, so balance as on 1st January 2015, to balance BD was 48,000. Then there was an addition as on 1st September 2015, so to bank account 16,800. As on 31st December 2015, you have charged depreciation, that is PL account 4,800, and the balance as on 31st December 2015 is rupees 60,000. So balance as on 1st January 2016 will be to balance BD 60,000. Then on 31st December 2016, you need to charge depreciation at 10%, that is 6,000, and balance was 54,000. Then again on 1st January 2017, to balance BD was 54,000, and on 21st December 2017, there was an addition of machinery of 11,400, and on 31st December 2017, you have charged depreciation, that is by PL account 5,400. So the balance was rupees 60,000. So balance as on 1st January 2018 is rupees 60,000. Then On 31st December 2018, you have already charged depreciation to the extent of 6,000. So here again you need to charge depreciation, the balance depreciation of 2,460, and then prior period item account 17,702. This is the balancing figure, and this is the balance as on written down balance as on 31st December 2018, that is 33,838. So this is the entire plant and machinery account ledger that I will show you in one screen. So this is the plant and machinery account in one screen. Thank you. Thanks for watching the video. If you like the channel, then subscribe the channel to get regular updates